and that is Nvidia. The news out today, Huawei developing and testing an AI chip that they think will compete with Nvidia. That's got the stock down a little over 2%, about 2.2%. We're looking at a strategy. It's a complex strategy in Nvidia. If you watch Fast Market and you watch this, you've seen it before. It's the short put vertical plus the long call calendar in Nvidia. Now it's a bullish position, but one thing this does, it turns profitable if Nvidia just stays right here, and I'll show you why. First thing we do is we sell this week's May 2nd 105-100 put vertical. So you're selling a put vertical using that credit that you would take in to buy the May 9th and sell the May 2nd 115 call calendar. So selling the put vertical to buy the call calendar. And if you do that, right now it's trading about between a nickel and a dime credit. I put it in for even because it was moving back and forth, but right now it's trading almost a 10-cent credit. So you would actually be buying the calendar spread for less than you're selling the put vertical. That is collecting theta, but is the bullish trade looking for a move up towards $115 in Nvidia. But if you don't get that move, as long as it doesn't breach the 105 level, selling the put vertical is a neutral to bullish strategy. Buying the call calendar is a bullish strategy. So doing this for even, or in this case, any type of a credit, would insulate you from any losses on the upside of that debit. So this one is the risk defined on this. It's the width of that $5 put vertical. That's the definition there. The margin is about $500. That's the width of that put vertical. And like I said, you're looking for a move. The target is about the 115 strike. So a neutral to bullish strategy in Nvidia, looking for a recovery to the upside here towards $115.
Following a report that Chinese tech giant Huawei is preparing a new cutting-edge AI chip in response to President Trump's ban on Nvidia chips being exported to China, Nvidia's stock slumped 3.7% on Monday. Huawei has contacted certain Chinese tech businesses about testing a new AI chip called the Ascend 910D, which it expects would be more potent than Nvidia's H100 AI chips, according to a Wall Street Journal report published Monday, citing unnamed sources. The 910D chips, which are still in the early stages of development, are the replacements for Huawei's 910B and 910C semiconductors. More than 800,000 Ascend 910B and 910C processors will be shipped by Huawei to clients, including state-owned telecom companies and AI firms like ByteDance, the parent company of TikTok, according to the Wall Street Journal. After the chipmaker revealed in a regulatory filing this month that the U.S. government had essentially prohibited exports of its H20 chips, designed especially for the Chinese market in order to comply with more stringent U.S. trade regulations, Nvidia's shares fell precipitously. According to J.P. Morgan analysts, the prohibition may reduce Nvidia's revenue by up to $16 billion this year, and the company stated it would record a $5.5 billion loss as a result of the policy change. Earlier this month, Bernstein pointed out that $17 billion, or 13%, of Nvidia's revenue in its fiscal year 2025 came from China. According to D.A. Davidson analyst Gil Luria, who stated in an interview that chip smuggling in China accounts for up to 40% of Nvidia's income, that percentage may be greater. After Reuters revealed that Huawei's 910C chips, which are supposedly competitive with Nvidia's H100 chips and might start shipping as early as May, Nvidia's shares fell last week. These Nvidia processors, which are two versions behind Nvidia's most recent Blackwell chips, were prohibited from being sold in China in 2022. As a result of investor scrutiny over AI spending by big tech firms and Trump's trade war, Nvidia's stock has dropped more than 17% in 2025. The U.S. government announced earlier this month that it is looking into Nvidia's use of its AI hardware in China. Jensen Huang, the CEO, spoke with trade officials in China during his visit. The company has committed $500 billion to the development of the U.S. AI supply chain, while also seeking to increase the size of its domestic manufacturing base. So, what implications does this have for Nvidia's stock? Let's explore that. But first, A big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Shares of Nvidia down today on reports that Huawei is developing a competing AI chip. That's ignited debate over in Silicon Valley on how exactly to approach the arms race with China. Deirdre Bosa has more in today's Tech Check. Dee.
Hey, good morning, David. So on one side of that split, you have big names like Mark Andreessen, Bill Gurley, Brad Gerstner. On their latest podcast, the latter two of those, Gerstner and Gurley, they argue that containment is a distraction and ultimately a losing strategy. Stay in your lane mentality versus looking around for your competitor, which will cost you, they argue. But then there's another side, many of which are within or have close proximity to the current administration that are just dismissive of Huawei's and DeepSeek's progress. They argue that the U.S. lead is too big to lose, and they see this as a more finite race, win or lose. You've got David Sachs, Trump's AI czar, who argued on a recent All In podcast that the government has to be tough and cannot let China have access to our leading edge technology. After our own Tech Check segment about a week ago on export controls backfiring and boosting Huawei, someone else from the administration DM'd me saying that I misunderstood and Huawei was actually way behind. Elon Musk, by the way, he's more complicated supporting EV trade barriers, but seeing China as a serious threat. Meanwhile, guys, the news of the day, Huawei is about to test a newer and more powerful chip, the potential of which is hitting shares of our own national AI champion, Nvidia. Back in 2019, I went to Shenzhen, China to interview Huawei CEO and founder Ren Zhengfei. At the time, Huawei was facing a U.S. ban of its telco equipment and a ban of its Android license, which nearly killed off its smartphone business entirely. Here's what he told me at the time.
If we weather the storm, then we will get stronger. So what doesn't kill you will get you stronger. In China, we say the phoenix will rise from the fire, and the bird that doesn't get killed by the fire is a phoenix. And we believe this big fire will address this issue at our hand, and we can get stronger during this process.
And that is really the Chinese mentality that has endured since then, summed up quite nicely. And since then, of course, Huawei's comeback, it has been nothing short of remarkable. It has rebuilt its smartphone business. It's challenging Apple for market share. It has become the second largest cloud provider in China, designs its own processors, and powering a new generation of AI models. All of this despite U.S. efforts to contain its rise, which didn't work back in 2019. And from what we're seeing so far, it doesn't appear to be working this time around.
In a recent appearance on CNBC, Stacey Rasgon of Bernstein stated that despite industry concerns, there is still a high demand for Nvidia and the company. I mean, that is sort of the big question. At least the demand environment appears to be really strong at the moment, in my opinion. In an attempt to disparage Nvidia, I believe they will sell whatever they can this year. The question then becomes, how much can they get out the door? However, at this juncture, I would argue that investors are the only ones who appear to be particularly concerned about the demand environment that resembles AI. Similar to the businesses that are currently spending, their capital expenditure requirements and estimates are increasing rather than decreasing. The market will continue to penalize Nvidia for failing to meet its enormous and even irrational growth projections. Large cloud providers, who account for around half of the company's revenue, are reconsidering their strategies in light of DeepSeek's launch and searching for less expensive chips. Compared to its prior 12% QoQ growth, Nvidia's Q1 projection indicates a 9.4% QoQ sales growth. It is anticipated that its adjusted margin will also decline significantly to 71%. When Nvidia does not report a strong quarterly beat, the market does not like it. When the company reports poor growth in the upcoming quarters, the stock will continue to be under pressure. Nvidia is dealing with a number of issues. One of them is competition. Nvidia may have less access to these chips as a result of fierce competition from major rivals like Apple, Qualcomm, and AMD for TSMC's 3nm capacity. Why? Because TSMC's 3nm manufacturing nodes are also used by Nvidia. Other industry titans that are choosing to produce their own processors are also directly competing with Nvidia. Amazon provides options with its Trainium 2 AI CPUs. The increased processing power and potential cost reductions of Trainium 2 chips may cause AI workloads to move away from Nvidia's products. According to reports, Apple and Broadcom are collaborating to create an AI server CPU. With the Jaguar Shores GPU, which will be manufactured on its 18A or 14A node, Intel is also making a strong effort to return to the market. According to Cramer, there is an absurd demand for Nvidia's CPUs. Nvidia's destiny, however, is up to the government, as the Trump administration has not yet decided how many chips the tech giant can export, Cramer said. Investors were instructed by the renowned stock picker to do nothing with Nvidia stock. According to Morgan Stanley, which Cramer cited, Nvidia does not have enough chips to match the demand for them because the demand for its GPUs has increased dramatically. Additionally, Cramer pointed out that Alphabet just disclosed that it makes extensive use of Nvidia's latest Blackwell chips. According to the stock picker, Nvidia's operations have quickened, and the company is back following concerns over how DeepSeek will affect it. According to Cramer, investors are awaiting word from the Trump administration on how much Nvidia will be permitted to export its chips going forward. He points out that he used to suggest that investors trim their Nvidia holdings, but now he suggests that they do nothing with the stock. Even though we recognize Nvidia's potential, we are convinced other AI stocks have a better chance of producing larger profits in a shorter amount of time. While prominent AI stocks lost over 25%, one AI stock has increased since the start of 2025. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
All playing out, it says China wins when it comes to making the cheapest products, but when it comes to making the best, the U.S. should come out on top. Joining us now is Tusk Venture Partners co-founder and managing partner Bradley Tusk. Bradley, it's good to see you. So where do you kind of fall in this debate?
Yeah, I think in that Andreessen, Gurley, Gerstner camp, which is, like you mentioned, if the question is who can produce the cheapest products at the lowest quality, fastest, that's still China for sure. But when it is who can produce the absolute best products, the best technology, the best innovation, that's still the United States. And that gets to the question of, okay, if we do better in that kind of competition, which situation is better for U.S. companies, a free market or lots of government controls? And I would argue that a free market where we can export and import freely, bring in the raw materials we need, sell chips when we need to, and be able to really access everything the world has to allow us to come out on top, that's really our best bet here. I just don't have enough faith in government, regardless of which party runs it, for them to run this fight correctly.
And yet, you look back at the past few years and you say, okay, the delays that China has, faced because they don't have the latest technology and there have been these controls. Even something as simple as AI is written in English, right? That's the global language. And if you spin this story forward 10 or 15 years, if their plan is, world dominance by 2039 or whatever that 100-year anniversary is of the CCP, maybe the next phase of technology is theirs to dictate. And so does it feel kind of easy for us now to go, yeah, let's make sure that the markets are open and competitive, but kind of not aware of just the full downsides of what could happen if they end up leapfrogging us in some ways?
Yeah, I mean, look, this is the risk on either side. And this is why these are good issues to debate, because no one actually knows the answer. So, for example, DeepSeek arguably was able to develop a model that required a lot less compute and a lot less energy simply because they were actually banned from using U.S. chips and U.S. products and technology, and that forced them to become more innovative. So there's one argument to say the more that we kind of keep them in a box, the more they're going to end up being more innovative, and that's going to present a greater competition and threat to us. There's another one to say, well, if we keep them in a box, they won't be able to climb out of it. I kind of generally think that keeping China in a box doesn't tend to work. And not only would I like to see the U.S. just allow the free market to work and allow American companies to win, let's do that with energy too, right? So in order to really advance in AI, at the moment, we do believe that we need a lot of compute, which requires a lot of energy. And one thing the Trump administration can do is take the restrictions off. Make it a lot easier to permit and build nuclear facilities. I know Trump doesn't like wind, but it adds value. Solar, and whatever it is. For example, I would love to see the federal government create a program that incentivizes cities and states to compete against each other to get federal funding to say, you know what, all of these roadblocks and obstacles that we put up against energy permitting, environmental reviews, community reviews, union labor, all of these things that stop us from building what we need, we're going to, the cities and states that embrace reform, we're going to reward you for that.
Yeah, I think.
So far, Nvidia has benefited greatly from the artificial intelligence AI explosion. The tech firm is now the main player in the AI build-out after creating the most potent processor in the world, the Graphics Processing Unit, GPU. The most important AI operations, such model training and inference, are powered by GPUs. However, the business hasn't limited itself to chips. Rather, it has built an AI empire by providing the goods and services that clients require in order to build and grow infrastructure and ultimately use AI to solve problems in the real world. Quarter after quarter, Nvidia's sales has risen to all-time highs thanks to all of this. In the most recent full year, revenue increased 114% to $130 billion. Additionally, the business has produced exceptional sales profitability, with a gross margin that regularly exceeds 70%. This is great, but investors are concerned about one issue in particular, given the possibility of a more difficult economic climate in the coming quarters, and this element might determine whether Nvidia's growth soars or sinks. We're going to learn more about this topic as earnings season progresses. This week may actually see the announcement of some crucial information, so for Nvidia, this is a make-or-break moment. Here are some things to be aware of. Let's start by thinking about the cause of the business's success. Naturally, its high-performing goods and services are at the top of the list. Released last winter, Nvidia's most recent Blackwell architecture boasts a number of revolutionary features, including the fastest chip to date and improvements in security, networking, and dependability. Nvidia is still putting in a lot of effort to make sure that clients receive this cutting-edge platform because demand for Blackwell was so great that supply could not keep up with demand. However, the broader need for AI has also been a major factor in Nvidia's growth. Nvidia's revenue situation would be very different if consumers had no interest in expanding on major platforms. The company's data center business accounted for 90% of its overall revenue in the most recent quarter, demonstrating how strongly it depends on this need for AI. For this reason, its revenue prospects in the upcoming quarters are significantly impacted by the overall trend in AI investment and build-out. The financial community would become immediately concerned about Nvidia's growth if there were any indications that such spending was going down. This leads me to the important events to keep an eye on this week, as they have the potential to significantly affect Nvidia's stock performance and prospects. This week, Microsoft, Amazon, and Meta Platforms, three of Nvidia's biggest clients, each released their quarterly financial results. During these calls, the firms typically provide an update on their AI initiatives and annual expenditure plans. Even though these three businesses have been heavily investing in AI lately, recent developments may cause them to change their approaches. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Agreeing to help set up the action today. All right, KG, let's talk about the setup for this week and the expectations as we gear up for, really the close of April. It's been a volatile month, but as we wind down this month, it's very different than where we started. How would you characterize it?
I mean, we had a pretty decent showing for the S&P 500 off of the lows for this month. Obviously, a lot of volatility, and you can see that still with the VIX elevated at around 25 here. But what are we looking for this week? I mean, there's a lot of economic data as well as earnings to really push the markets either up or down. And I think right now, if you're looking at the S&P 500, we're testing a pretty key gap that we had basically since that Liberation Day announcement. Now, if you're looking at the S&P 500, it's going to show on April 3rd, and that's because the market was closed after the announcement here. So if you're kind of looking towards the upside, what you're looking at is a potential resistance area sitting at around 55.75 here. You want to be able to fill this gap on fairly large volume. Now, we are looking, we're stalling out here a little bit, decent. I mean, off the overnight lows, but you are seeing some weakness when it comes to maybe some of the semiconductor names here. So overall, I think there's a lot of economic data from GDP to PCE data to jobs data on Friday to really try to move these markets. And I think that we'll have a make or break week. And it's been a nice little showing here, but we have not really recaptured the high that we want to really capture, which is 56.75. So if we're able to get there by the end of this week, I think you have a little bit more confidence as a bull that this can actually continue.
Okay, that's a good point. And then keep in mind, for those who weren't on top of it, we finished at 55.25 on Friday. So again, that resistance level that you're watching out for, 55.75. But let's talk about, so obviously this is a jam-packed economic data week, and not much to chew on today in terms of that. It seems like what would be front and center is the tariff conversation. We did expect to see the Trump administration making their rounds on the Sunday shows. You had Treasury Secretary Scott Bessent on ABC's This Week yesterday. Bring people up to speed on the latest there.
Yeah, so Scott Bessent, once again, did not really confirm or even deny that President Trump actually spoke with Xi, but he did make a mention that there were discussions at the IMF, but they did not actually specify, or he did not actually specify if they were actually tariff conversations or something that was, else that was actually discussed here. So there's a little bit of back and forth. The market's definitely going to continue to keep their eye on it. But one thing to just kind of note, after a while, when you have an event like this one, the market really starts to price that in. And so I think that's really what you kind of saw last week. The White House also was pretty light when it came to the commentary last week as well, not as aggressive. So I think that also gave bulls a little bit more confidence here, but talked about the respect that the Chinese have towards the United States, as well as the relationship with President Trump, and really trying to set the stage that conversations will be had, and hopefully a deal can be made here. Now, the market is also expecting maybe some preliminary deals or some structured type of deals being announced at the latter half of this week, not with China, but with some other countries, potentially Japan, as well as India here. That could also give us a little bit of a boost. But overall, once again, there's a lot of drama about who's talking to who, and that was definitely capturing the headlines from last week, Diane. But at the end of the day, I think the market really wants to see pen being put to paper here and actually seeing some concrete information coming out of the White House. And I think that'll be the strong driver for bulls if it's actually positive information and not negative rhetoric.
Right, especially if we see something that looks like a framework where we could see further deals from, especially when you mentioned India and Japan.
They could suffer from President Donald Trump's proposals to levy taxes on imports globally in two ways. Because they import components and completed goods, tariffs may raise their costs. In a market where prices are higher due to tariffs, consumers may have less money to spend on the products of these tech companies. It is feared that in light of this, Nvidia's clients would reduce or halt their AI expenditures. Therefore, it will be crucial for Nvidia's shareholders or prospective investors to pay particular attention to any remarks made by Microsoft, Amazon, and Meta regarding their AI goals during their earnings announcements. Now, I have excellent news if you're anxious. Despite the ongoing tariff tumult, there is currently cause for optimism on the market for AI in the future. Alphabet, another significant Nvidia client, reaffirmed this week that it intends to invest $75 billion in capital projects this year, and that its partnership with Nvidia represents a significant benefit. To further demonstrate its continued support for the chip creator, Alphabet also said that it will sell Nvidia's next-generation Vera Rubin superchips when they become ready. Ahead of Amazon's earnings report, we also have a favorable indication from Amazon Web Services, AWS. An AWS executive allayed concerns last week when an analyst report said the business would be reducing its AI expenditures, stating that expansion plans were unchanged. All of this indicates that Nvidia is indeed at a turning point in its history. While further growth in AI spending would be fantastic, the chip giant might suffer a serious setback, at least in the short term, if a big customer unexpectedly cuts down on spending or AI development. As I indicated earlier, there are indications that the rate of this AI surge may continue unabated. However, this will only be confirmed by the assurances provided by these significant Nvidia clients this week.